Good afternoon, ladies and gentlemen. We now have a quorum present, and I'm going to call this joint meeting of the Ways and Means Committee and our Appropriations Committee with Chairman Rogers. Do you have a number or anything? What do you call that committee? Is it a particular name? Or
General Government Appropriations.
General Government Appropriations Committee. Probably should have put a little sign-up list out there for everybody that's here. If you came last Tuesday and you came back, I would just like an opportunity to send home or to your friends or your family an appreciation notice. I mean, amazingly dedicated to whatever it is that you're here for, and we're impressed by that. We're here to continue essentially our meeting that lasted a little over 2.5 hours last week. Our mission is stabilization, revitalization of our ability to collect the taxes that are legitimately due to our state, so that we can deal with one of the most unprecedented budget crises I think any of us here have ever faced. So in cooperation therewith, we've had a Commissioner of Revenue before the committee, and we have Commissioner Graham back again today, we're delighted to say, in a good faith effort to explore all possible ideas and how we might cooperate at our level of government in the mission of generating as much revenue with no new taxation as we possibly can. In other words, those that owe it to Georgia, we expect to try to collect it some way or another. So with that being said, does any member of the committee have anything to say before we start hearing from Commissioner Graham? I don't see any, so Commissioner Graham, if you have any pre-prepared remarks, and we'll try to hold our questions until you've gone through your agenda for today, and you're recognized for that reason.
Again, with me today is Frank O'Connell, head of our Tax Law and Policy Group. It says it's on. Let me pull it closer. Is that better? Okay. Frank O'Connell of our Tax Law and Policy Division is with me. Mac Chandler should be in the room, and Ed Maney will be joining us shortly. As far as the outline I presented Tuesday, I think we're pretty much through most of that information. There's a little bit of information on local government services and property tax, and the Alcohol and Tobacco Division. That's mainly background information you probably want to dispense with today, and unless somebody has a specific question. You did ask that we bring back a few maybe success stories of things that we share from time to time with certain folks, and just the order of magnitude of what some of these cases can mean to the state. You can do certain type of processing work or collection work at a small dollar threshold, and the rate of return is always there. But on the large corporate area, it can be significant. We unwound one royalty company, and I won't go into the tax structure that's used here to explain the structure, but one royalty company, the situation we unwound in 2006 was a $39 million payment to the state. Nevada holding company, where companies are shifting their taxable income to a non-taxable state like Nevada. That one in 2007 was for $29 million. A captive real estate investment trust, and excessive management fees, where in this structure they were reducing their taxable income by attaching a value to the intellectual ability of their senior management. I mean, I can't make this stuff up, but and they were advised and brought that structure by their accounting firm, and they accepted that payment was $44 million to the state alone. Another captive REIT in 2009 was a $4 million payment, and another one, captive REIT and holding company issue in 2009, was $30 million. Those three alone is $78 million from 3 taxpayers. And I don't need to show you. All you got to do is look at the Georgia Trend or Atlanta Business Chronicle and look at the number of businesses. They're not all engaging in these kind of practices, but a lot of them are, and it just takes people to get there because they're not voluntarily going to show up. If you send them a written notice, you got to take them and unwind it, and many of these we have to litigate. And the only way to help the AG's office is for us to do all the background work and evidentiary work to help prepare them for the case. So we can't just turn it over to them and hope they get it, because they have to understand all the background work, all the audit work that went into it, make sure people were treated fairly in that process. and you instantly have half a dozen to a dozen in our business high-paid professionals trying to unwind one case with one taxpayer, and all of you want to serving your taxpayers and your corporate constituents in your neighborhood too. But that's where the distraction comes from. And then I have a number of other letters of appreciation we've gotten from situations we worked on where there were regulations, policies, practices, or just unwinding what were non-compliance issues that worked out. And nobody likes paying, but they appreciate the way they were treated. But I'm not going to go into those today. I can do that privately with you if you'd like to, and I'll leave it at that.
Okay, Commissioner, thank you for that, and we're going to open up for questions. And if you don't mind, I've got a couple, and I know Chairman Rogers does too. I think we were expecting some data from y'all today on some auditors and so forth that we added, and maybe we can get to that. And just to give you a little forewarning, there's a study going on in Texas I've been told about by some of our research folks. It's sort of an integrated tax question of how they're dealing with gap accounting to determine what really ought to be sales taxable as a way of sort of audit oversight or whatever. And if you all have any knowledge about that study or the status of it or anything we can learn from it, we'd like to hear a little bit about that, again, in the fiduciary tax arena. But if we could get back to the auditor situation, which is sort of where we adjourned last time. You were going to bring, we knew we hired 9 out of state and then 3, and I think you were going to provide us with some, if you would.
I have it. I missed that. With respect to the 12 auditors that were authorized by the General Assembly between April of 2008 and November of 2009, they collected $6 million, what we can document. So it's roughly $500,000 a position, but that has not been annualized or put on a full-time equivalent basis. I don't know if all 12 are working that full period either, but we can associate $6 million in collection from that. And the out-of-state audit program collections from that have been $49.5 million to date, averaging $12 million annually. There are 15 authorized positions, and on average, we've been able to keep 12 to 13 of those filled. As it does take some training, not to train them how to be auditors, but to get them into Atlanta, have them in the marketplace working the necessary reporting that they do. But clearly there's a high rate of return there. And at one time, I haven't looked at it in a few years, but 4 or 5 years ago, I knew for a fact that the state of Florida had 75 auditors in Atlanta, working out of Atlanta. And y'all were very helpful in funding the 12 that we have, and that's all we have out of state. Now, we do send people from here out of state on an occasional basis, but you lose a lot of productivity when you're doing the business that way. 3 convenience store auditors that were authorized, collections in FY10 were $750,000 from July through November. And then the IRS levy extract program, which is strictly on the collection side, between December of 2008 and January of 2010, there's 6 positions that work in that IRS program where we exchange information and exchange collection activity. That's generated $9.8 million. And so the normal collection average for 6 people is between $3.5 and $4 million.
Could you tell me how that information has been generated? In other words, is it reasonable to expect that if we put a new auditor on after training that we could document on a month-to-month basis the progress against the cost so that we could put some triggers in an investment? I mean, do you understand what I'm trying to ask you there? How did you compile that information? Was it month-to-month, day-to-day?
Ed could speak to it directly because it's in his world, but in order to extract this, in the IRS, you look at the number of accounts and what was paid through those accounts on these other ones. You look at the actual audits that they did. You might have a hard time doing that within each year because audits start on a staggered basis throughout the year and they may not finish in that given year. In other cases, you will have taxpayers that drag their heels and refuse to produce information. And so some audits will have the appearance of taking a year and a half to complete before money actually comes across the transom. Ed, you want to comment on that? Did you hear enough of that?
I think in answer to your question, we can track. We have reports that track all the auditors' activities, all of the collection agents' activities. So all of these programs are tracked back to the individual persons that were participating in those activities. So we could track it.
So to be clear, if we were to appropriate X amount of dollars to line item add auditors, number one, we could track how much that generates for the state on a by added auditor basis, and we can do that for specific periods of time. In other words, we can tell if we're getting a return on our investment, literally instantaneously. Is that a fair assumption?
Yes, I would say that you would want to start, though, looking at the aggregate of the program, like the 3 convenience store auditors, not on a person-per-person basis, because, like, for instance, on some of these large corporate audits, we don't just show up at the doorstep on Monday morning and say we're going to do an audit. You know, we coordinate with those companies to plan when it's going to start. So it could be 4 to 6 weeks out from when we plan it to when you start it, because they're dealing with 49, in some cases, 49 other states and the IRS, and we all can't just show up at the same time. But if you look at it as a group, and then we could break it down further as to each specific position, how much that person may. But if you were looking for a rate of return on every person, you may not see it in the first 6 months they're there, or first 9 months they're there, but you can certainly see it as part of the program.
Okay. 25, who's that? Is that Representative Black?
You didn't say Senator.
I said Representative Black.
Commissioner, yesterday Representative Powell raised some questions about the rebates that were sent out for interest on these refunds. I said rebate here again. We're talking about the refunds that were sent out on the interest on the refunds, minuscule amounts. I had spoke earlier with Mr. Chandler about the possibility of maybe some legislation that would limit the amount that you'd have to fund, give the department some options to, if it's less than $1, just to give them credit unless they made a request for it. Maybe also put a cap on the amount that if they owe less than a couple of dollars, that you would write that off rather than bill them for it and everything. But I'm sorry, but I haven't had a chance to address this issue with you, but I'd like to get you to give me your thinking on trying to do some legislation like that.
Sure. I think there was always some room for that. I mean, I think you have to be careful. The discretion is helpful. I mean, if we didn't have, by statute, didn't have to refund anything less than $1, there's some guidance that we don't necessarily have to do that. But what you get into is there are people out there argue it's my 75 cents. I can buy a soft drink with it. I want it, and others say it doesn't matter. And so to have specific guidance would be helpful, because we're building some of that discretion into our integrated tax system, especially in sales and withholding, so that we're not sending out assessments for $2 and $3 when it can be settled with the taxpayer through the next filing period. So we're building that in. It would be helpful to do that in the individual world as well.
Now, I think from a political standpoint, we'd have to refund them if they don't owe them but a penny and they want you got to give it to them, I think.
Well, part of what's in the tax booklet today is that if you want it, you have to ask for it. And one of the things I talked with Chairman O'Neill and others about before we went down the path we took last year is we didn't want to invite 100,000 people to ask for it. Say, we know we owe you money. You know that we owe you money, but we're only going to give it to you if you ask for it. And that just creates another some number of thousands of transactions just to get the money out to somebody for those that do want it. So yeah, you might save money on each item, but when you add it all together, you're going to spend more trying to work that process. To have definitive guidance, the only thing we got to make sure we give confidence to taxpayers in that we're not just taking an extra 99 cents from everybody because of what we calculate. If we had a difference of opinion, as I said earlier, if I'm running a mortgage company, I'm in an escrow account, and I've got 1 million mortgages, and I'm escrowing 2 cents more per mortgage, that's not a bad rate of return for doing nothing. So you have to maintain the confidence level of the public if you're going to go that route.
Now, you say you've already got some stuff built into your programs on your computer that you don't bill some of these lower amounts if they...
In the integrated tax system and the sales tax component, we are building that functionality into it today. So if somebody filled a return out and sent it to us, but the payment that came with it is $2 difference, we work that out with them in subsequent periods. We don't just start sending them notices that you owe us $2, but that's all happening electronically. If you do it by paper, what the department used to do is once you got on the past due path, we were sending notices out every month, and in some cases they've been getting notices for 2 years. Well, some are either gone forever or they're just never going to pay in the first place, and we were going broke on postage. Now what we're doing is doing those notices that are required by law in the statute, plus maybe one more, and then we're only sending annual notices after that to say you still owe this money and you need to engage the department to work it out, other than having collectors also deal with them as well. But there's 140,000 or so sales tax registrations in the state, and so if you're sending out unproductive notices, you can spend a lot of money on postage real fast.
Of course, my goal, and I think the goal of this committee, would be to have some systems and way to reduce the cost of operations for the department. And I think the citizens overwhelmingly would support, if they're on, the record of my constituency was 6 cents, getting a refund for the interest on the refund for 6 cents. And I think the people would support that. But at the same time, you've got some people that would demand, but if it's owed, they want it regardless. So I'm still not clear that as to whether or not you'd like to see something developed in this area.
I would love to have specific guidance that says that anything less than $1 we can either credit to a future account if it's a refund or not pay.
Thank you.
One issue is some people say, why don't you just credit it next year's account? Well, we could have done that if they file next year. They may not have an obligation to file. They may move, or they may take it on the return, plus we add it to it, so we paid them twice. And while it's a de minimis amount of money for each one, when you add it up, it's more material. And there are people that we deal with that would come back and say, you're paying people twice, you're incompetent.
Chairman Martin.
Thank you, Mr. Chairman. Commissioner, thanks for being here. Question about the audits. What percentage of those are kind of department driven, that there's a company out there that you just haven't been to see in a while, and they have a lot of transactions and you'd like to go see them and do what auditors do, versus the percentage that are driven because somebody's filing for a refund and we need to audit that before the refund is given. I guess the question I'm getting at is, are you getting to all the audits that you would like to see, that there are companies around the state that you'd like to look and see how they're doing, or all your auditors time being gobbled up into places where there are refunds being claimed and they need to go in and do that because we audit before that?
Ed might be able to answer this more accurately on the percentage test, but there are clearly audits that we would do if we didn't have to audit so many of the large dollar refund claims that come at the department. And you all helped us last year with legislation to help block some of the frivolous claims that we were getting. One of the worst examples we have, I shared last year, is people will do a data dump. They'll do a general ledger dump on us claiming we want an exemption or a refund for all these transactions, and it's every transaction on the general ledger. It's a claim for $20-some million, and I think in one case we paid them $300,000. And there was no reason to litigate it afterwards. They took $300,000 and said thank you and went on their way. But if we didn't audit it and review it to an extensive level, another $22 million would have gone out the door. And those cases happen all the time.
Yeah, and I'm not questioning the need to do that. I was just wondering if it's a smaller amount, we do the same thing. We go in and do an audit. If it's a $20,000 refund, we have to go in and do the same audit. And I'm just wondering if that, if we could provide you some latitude to make sure that we don't get in the way of companies that you wish to audit by requiring you to do a large audit on a small refund.
Well, there's no requirement that we do an audit on a large refund. I mean, that's just in our best business sense is what's reasonable.
No, what I was talking about, I mean, on the smaller refunds. I mean, if you have a small refund, but you may have to go do a 6-month audit before you're going to do that refund.
Well, we have different thresholds in place, but we wouldn't do a 6-month audit on a $20,000 refund. I mean, there might be unique cases where that's happened, but there would be other triggers that would have driven the need for looking further into it. I mean, we don't just universally do every one of them, but we certainly do a great majority of them, of the large dollar ones. Ed, do you want to comment on?
No, and again, I'm not questioning the large dollars, but so we don't necessarily, you don't have to do a complete audit for a smaller refund. I just wanted to make sure. Because the last question, Mr. Chairman, that I was going to ask is, are you able, Mr. Maney said you sort of are able to track an auditor's time. Are you able to track that sort of on a project basis so you know, this audit was, most effective in terms of this many hours going into it? And I mean, it doesn't have to be a payback every time. Mm-hmm. I know sometimes you just need to look at things and everything comes out the right way, and that's good for all. Mm-hmm. But are you able to track that and sort of get a metric of where the most valuable time to spend the limited resources you have? Are you able to track that, and is that information available for the committee? I know it can't be per company.
In some form or fashion, I'm sure it is. I mean,
on a global basis, not per each, by industry. It's not by industry. Globally, I can tell you how much we return per hour.
But some of the processes we've been through in the last few years is historically, if the department had a question about a refund, we would ask the company or the individual for every one of 11 different things, including canceled checks, bank statements, and everything else. And we've discontinued all those practices. Where now we're just asking for that information, what we think is necessary only to establish the claim. And so if you got a notice, it should only have 1, 2, or 3 items that we're asking for rather than 11 items, include the bank statements and checks and everything else that nobody's probably ever going to look at, but we're making the customer go to an extensive amount of work just to put it together. And so we've eliminated those practices. And we do the same on the corporate, where a full-blown audit may not, it may be referred to as an audit, but it won't be a full-blown audit as much as a validation of what's been submitted. Some people will call that an audit. We wouldn't call that a technical audit.
I think I'm not being succinct to my question. What I'm after is if you have an audit, a look, review, or whatever, and you assign 2 or 3 people or one person, and they go out there and do this for X hours, at the end of the day, do you track what value you got back for those man hours on that project? It doesn't necessarily have to return money to the state to be valuable, but I'm just quite, I mean, everybody in these budget times are looking for where you put your head count in terms of a return to the state. Mr. Maney had said earlier that you sort of track dollars returned to the state on a individual basis. I'm not talking about by manufacturers versus service versus anything else. It's just on a project basis. Do you know that you spent the equivalent of 2 full-time years on an audit that didn't yield anything? Or I mean, are you able to track that?
Yeah, we're able to track that, but make sure you understand that nobody's compensated or evaluated by how much they collect.
Absolutely.
Because early in my tenure at some of the regional offices, I'd see charts of people doing their own bar charts of how much money they were collecting. That's it tells me it's a bad motivator.
Right.
You don't want people out there doing that because they're going to abuse people. With the best of intentions, they're going to abuse them. They're not going to waive a penalty when a waiver was warranted.
Sure.
So.
Okay. Thank you, Chairman Martin. Chairman Scott.
Thank you, Mr. Chairman. Commissioner, thank you for your time. And How many corporate income tax returns do we process a year, approximately?
200,000. I'd have to check. We do about 4.5 million returns a year, or the 4.5 million taxpayers. 17 million 11 million documents. Individual is about 3.5 to 4 million. It's probably at least 500,000.
500,000.
I was
But
told,
now,
Commissioner, I was told 200,000 by your people.
Well, I'm sorry. That's probably good. Well, it also would depend on how you count it. I mean, if it's C corps, LLCs, LLPs, the members of those. But from a just C corp standpoint, the 200,000 is probably a good number.
Okay.
Follow up?
If you double check that number, I'd like to know, and then I'd like to know how many people we have in the corporate income tax area, and how much we're spending on the collection of corporate income tax. I'd also like to know how many people we have in the sales tax area, and how much we're spending in the collection and the auditing of sales taxes.
Okay, we'll need to provide a chart. I mean, I'll let Ed comment. We'll need to provide a chart on that. And the reason for that is part of corporate and part of sales taxes, that's the general processing of that, and initial collection piece of that is done within taxpayer services, which is run by Denise Samuel, who's with us. And then the audit and compliance piece, or the audit piece, or past due collection piece, once it goes to an official lien stage, then it transfers over to Ed's world. So it may take some effort to say what's dedicated to each of those. Historically, the department was siloed by tax type, but what we found is we weren't getting near the productivity out of everybody in every function, as opposed to making it more functional driven as the type of work that was going on. Otherwise, you'd have to have processors, experienced. You have to have processors in this pool of experienced tax professionals like work for Ed.
Representative Scott, if you're asking about the collection of the dollars, I just want to make sure what we need, or are you talking about the folks that do the audits?
Both.
Both? Okay. I think
The number of corporate tax returns that we process.
Okay.
I'm not talking about everything that shows up as a
flow-through entities?
flow-through entity. I'm talking about the corporate tax returns that we process.
Because the commissioner's right. There's probably another couple 100,000 of those flow-through entities.
Right.
Just to make sure we're clear, you're talking about just normal, not just, also you're talking about past due collection, that type of activity, and the normal processing for the companies that send things involuntarily and pay voluntarily on time like they're supposed to. You want to see both. That's what you're looking to see.
That's right.
Okay.
My question gets back to, if we did not have a corporate income tax in the state of Georgia, how many more FTEs we could use to focus on the collection of sales taxes and other things, where I think we have the bigger gap between what is owed and what is actually paid.
Sure. You get the most bang for your buck if you got rid of the individual income tax, like Tennessee and Florida.
Well, that's 50% of the state's revenue. Yeah.
Well, they're going to pay us one way or another.
All right, clear on what he's asking for, though?
Yeah.
Okay.
The reason I ask is some people ask that question, but they're really only asking about what the auditors generate and what the enforcement collection people who go out and do levies and seize assets. So I want to make sure we were looking at the right piece. We get it now.
Okay. Thank you.
Commissioner, when I visited the processing center, Mr. Tim Shields and Matt Chandler met me there. He's telling me y'all do 200,000 corporate returns, and e-files are 2.5 million. Paper returns you're doing 1.5 million. And then your sales tax, I assume, disbursements 1.2 million is what he told me. That sound about right, Ed? Okay.
Okay, Chairman Williams.
Thank you, Mr. Chairman and Commissioner. I got a couple of questions I'd like to get clarified, if I could. How many people in Georgia or businesses in Georgia don't pay taxes that should be paying taxes? The reason I ask that, we've got folks in my area that has never paid any taxes, either sales tax or individual. Came in to get find out how to file a tax return because he never had before. How do we go about making people understand that if they have a salary or an income, they've got to file taxes? Now, we've got a predominantly large Hispanic population in Dalton, Whitfield County, and I'm sure these folks have never been told or either just said, well, we'll fall through the cracks and not even be counted. Is there a way to track this and find out how much we're missing by people that should be paying them or business that should be paying it?
Well, some of the tools that we use, and one of the most effective one is our exchange agreement with the IRS. So if someone is on the IRS's radar screen because they filed before or they were on a payroll from a company that filed, they'll show up as a filer or non-filer, and we exchange that same information in reverse. If they've never done either one of those, there are different tools that we use to try to identify them. We don't use school lists to see if they've got children enrolled in school. One thing that would help us tremendously that we've asked for in the past and have been denied, not by Ways and Means but by others, is when you register a C Corp with the Secretary of State, you have to put your corporate officers in the registration, not just the registered agent. But if you do an LLC or an LLP, all you have to have is a registered agent. So what happens then is we don't know what activity that entity is actually doing. We have no idea. They might have a sales tax obligation. And our only ability to find out what they're doing is to find out who all the members are or the partners are, and then do compliance activity with all the members. And if you're a passive investor, you resent that greatly. And it slows us down tremendously trying to parse through anywhere from 2 to sometimes 30 or 40 people as to who's responsible for the activity and who can just answer the question. If you don't have an obligation, we'll go away, see you later. But I've always contended it's not exactly a good government ideal, and I would attribute it to a political ideology. It's not exactly a good ideal for us to pursue 10 or 20 people when 3/4 of them are passive and have no responsibility. The same applies on the collection side, where we'll do full enforcement effort against all of them until we find out who's going to tell us who's responsible and what activity they're in. Ed, do you want to go further into how we identify folks? But we don't have census workers out there, knocking on doors trying to, and do you have a return here? Again, we got a lot of ideas and a lot of things we could do.
I'll tell you about them.
But some of those would be significant intrusions to privacy in the way you think you would want us to operate on. We could gather PTA lists, Little League lists, church lists that are available in the public domain but really aren't public information, pile them in our new data warehouse, and we could track people left and right. But I'm not sure from a policy standpoint. I think we'd want to talk about it more in depth before we did that.
Okay. On the sales tax end of it, right now, how do they apply for a sales tax number? Or somebody tell them that they've got to. I mean, a little small convenience store, they don't have they're not paying sales tax. It looks to me like if these businesses are registered through the city or the county with a business license, can you take that information? Could it be fed to you to let you know automatically that they've got sales tax due?
Well, we have to give them the benefit of the doubt. I mean, it's a convenience store; it's obvious.
Yeah,
there's something's owed. But we have to give them the benefit of the doubt on the introduction. We are doing a pilot program with a few counties that was talked about earlier in the week, where we could exchange information about what sales tax registrations we have versus what business occupancy registrations the local jurisdiction have. We could exchange that information. That'd be very helpful. And you still have to give them the benefit of the doubt, because some people will register for a sales tax number for a one-time event and then not do that one-time event for 2 more years. So you don't want to aspire and notice it in 24 months in a row when they don't have the obligation. The way they register with us is they register their corporation with the Secretary of State, then they submit the registration information to us, and we provide them with the registration number, sales tax registration number. One thing that we're looking into changing as we speak is that, like you can do at the federal level, that we're going to change our process where when you apply for the sales tax registration, you can receive the number upon application, And then if we find out later that you're not entitled to have a sales tax registration or sales tax exemption, then we can cancel it and revoke it. Some people try to get it so they can get into the apparel mart, merchandise mart, and buy things exempt when they aren't entitled to. So we have to do some investigation. Historically, we've done the investigation first, and then given them the number. We're going to revert the process and give everybody the benefit of the doubt they're being honest about it, and give them the number immediately to start that process. And back to the pilot program, I've seen no impediment other than the time and the technology exchange with the counties that want to work with us, that want to exchange information and protect the confidentiality of the taxpayers, for them giving us the information, getting the occupancy permit, getting our registration number, and doing it that way. And an idea that Chairman O'Neill and I talked about earlier in the year, if you're okay with me talking about, is, I've always said more collectors will collect more money, but you still got to protect the taxpayer and their rights and their privacy. But one way you can improve what we're doing without having to deal with that confidentiality issue is enable the local governments to have compliance people when they go out to check permits, to check if they have the sales tax registration, and they just give us that information, and we force the registration and start the notice process and the collection process without having to go door to door to do it. And that would parse through both sides of the world, because once they're on our radar screen, we're going to get to them. Well,
it looks to me like if they go to get a business license, somehow either the local jurisdiction should send a notification to you, the department, that they're in business, and of course you wait a period of time to see if any sales tax comes in, but at least you identify those that hold these things. It would work out good if you could do that.
Yeah, we would move to register them immediately. We'd move to register them as soon as that information exchange in the pilot program, and it could go through our Hall County example that's proved helpful to both sides. The results that come from that. Now, a lot of folks, there are some folks out there that have the obligation or collecting money and not remitting it. In a lot of the cases, they're not charging the sales tax in the first place.
Exactly.
And so what happens is, by law, even if they didn't charge it, but they were obligated to, we'll look to them to collection. Well, when that starts to put them out of business, then that drives another public policy issue that comes from that. Is it fair if they said they didn't know, a certain item was taxable? Do you put them out of business because they genuinely felt like they didn't know, where they with the best of intentions, took a farm equipment exemption certificate and didn't know better, like in the ATV world? We're trying not to put people out of business by making them pay something they never collected from the taxpayer in the first place. But in certain cases, we don't have legal authority to not collect it.
On the collection end, I mentioned this to Ed Maney yesterday. I brought, Ed, for you to look at documents on these Georgia tax FIFAs. This is a 3-week period from Whitfield County. 469 Georgia tax FIFAs are issued in this thing, representing hundreds of thousands of dollars that's not been paid. Now, I don't know how long they've been sitting there before you issue the FIFA and what you do about them. Now, my suggestion would be, in this case, that many, to contract with a collection agency and let them do the collecting for you. It wouldn't cost the state anything because they usually work on a commission. But for you to go up there and try to enforce these FIFAs, 469 of them just for a 3-week period, I don't know, 159 counties, I imagine there's just millions of FIFAs out there. Would that be, have you considered using?
We do that now. If you look at our website, there's, I think, 1,500 pages of people and companies with tax liens against them. Where the collection agencies work for us, and this is distinctly different than the former IRS program that was terminated, is we turn it over to collection agencies once it goes to official assessment and the lien is filed against them. So we're using 4, is it, Ed, or 5? 4 private collection agencies, and they're processing and doing collection work on thousands of accounts every day, all day. I think our program works really well because they're only seeing, the collection agencies are only seeing the taxpayer's name, the address, and the amount owed, and the tax type owed, which is public information that's on the lien.
Exactly.
The IRS's program was turning stuff over pre-official assessment, and so to do that, they were seeing additional taxpayer information that we don't think is in good measure. But if you were to change your opinion and to cut us loose to move it further up in the process, again, though, but you're going to be telling taxpayers who are trying to contest something or didn't know, you're going to turn somebody loose that's being compensated for on a for-profit basis, and it's a pretty aggressive tactic. Now, I'm happy to get aggressive, but from a policy standpoint, it would be a significant change in policy in the state.
Well, it would certainly cut down on the state's expenses.
We spend a tremendous amount of money, because one thing is, once it goes to FIFA like that, a court cost, filing fees attached to it that we get reimbursed for, and the 20% cost of collection fee is added to it, which part of which is used to pay the collection agency in the first place. And that's one thing we do need to get back for the committee that was asked for by Mr. Pruitt, is a breakdown of the collection fee and how it's spent each year, and how much lapses and goes back to Treasury each year. So we don't have that today, but we'll get that to you or first of the week.
Okay. Yeah, we have several questions, and if you don't mind, if we could keep them to maybe just one, and then a follow-up by each question, then I'll try to get back around if we have a chance. But Chairman Stevens, and then Chairman Rice will be next.
Thank you, Mr. Chairman. Mine's a short one. It has to do with tax collected and not reimbursed to the state. How do you feel about our internet companies? Are we collecting the tax that they collect?
If they have nexus in Georgia and have a sales tax obligation in Georgia, yes, they're paying and collecting, and we're getting it. There are companies that can sell into the state that don't have nexus here, that don't have that obligation, and so they're not going to collect it from their customers. But that's the same throughout the country.
So you're comfortable if they're an internet company and they collect the tax that we're getting the tax?
There are exceptions to that. I mean, people push the envelope, and that's why you need out-of-state auditors to go visit some of these people. We're having a significantly difficult time with the hotel intermediaries.
That's my question.
And getting their cooperation on audits. And their tactic historically has been to drag their feet, not submit to audit requests, not react to subpoenas, where we've had to move for forced enforcement of subpoenas. And their defense have been to do a slow drag on the issue. That mainly affects the locals from the local hotel motel tax. It has a sales tax impact to us as well. The other thing they're trying to do is get federal legislation, but with the political environment in Washington, there's no way they're going to get that. And all the states are united in that front, and we're trying to make some progress. But how aggressive I get also determines whether the Attorney General is going to be supportive of that aggressive tactic. And we've been working well together to move the cases along, and we've got some audits that are underway right now. But to go to higher levels of aggressiveness, the Attorney General's got to be in sync with me when we do that.
Commissioner, specifically, and we both know that there are cases underway, and we've had some very favorable decisions in our own Georgia Supreme Court. But just so you know how we feel at the committee level, when sales tax is collected out of state and paid for by the customer who's buying a room to be occupied subsequently in the state of Georgia, and then that room is discounted, and we don't get the sales tax that was or a portion of it, typically about 25%. We feel like we've been gamed a little bit by these resellers, and the expectation is that there's somewhere around $100 million of potential tax over the last 4 or 5 years that should have been submitted to the state that these case holdings may render to us.
I would say that is probably a very conservative estimate because of the practice they engage in. What they'll try to argue is that that the hotel motel sales tax law says the tax applied to those who are providing the room. They're arguing they're not providing the room. Well, if their position were to prevail, then every other otherwise traditional hotel motel organization will bifurcate their structure so that the price of your room is taken apart where X% of it is to clean the room, X% of it is for something else, and the last part of the amortization of the room itself is all they're going to collect the sales tax on. So it's, you know, if the position as it stands today, as they're taking today, were to prevail, it's not just that you're losing what they're not paying. Everybody else is going to try to copy that model and erode it further.
Well, based on the court decisions, be ready, because I think we're going to have some substantial audits that are going to generate some substantial tax payments into our funds, again, based on our own Supreme Court decisions very recently. So that, I understand that's coming from resources that are pretty reliable.
You asked about a Texas study, and I'm not familiar with that Texas study. We're going to need to do some research on that unless somebody here knows.
I doubt we're going to get to it in time anyway with these questions, so I'm sorry to take over. Thanks. Are you finished?
Yes, sir.
Chairman Rice.
Thank you, Mr. Chairman. Thank you, Mr. Commissioner, for being here today. This is real quick, and you might have answered this before, and I missed part of yesterday. Sorry, I was down at Judiciary trying to work through some issues down there.
We're glad to have you.
In any event, understanding the issues of collection on sales tax universally, there have been some claims or comments made that if some of that responsibility for collection enforcement was devolved to the local tax commissioner, that could increase the amount of collections dramatically just on the basis of their knowledge of who operates within their county boundaries. Not forgetting the idea that corporate clients, Home Depot and so on and so forth, operate all over the state, and therefore, you know, you'd want to have one collection point for them. But is there any way that that we could use the local tax commission organizations from a collections enforcement standpoint to increase our propensity to collect sales taxes?
Yes, so we have talked about that some already, and
I don't want to go back over something you already done.
And we have some extensive presentations that, Mac, if you'll make sure that Chairman Rice gets it, that talks about some of the policy ramifications. You know, our advice is for us to work together with the local jurisdictions to confirm registrations and compliance, but not to outsource the compliance piece of that, because if you're compensating somebody on a for-profit basis to do that collection work, they're not going to treat people fairly and equitably. You know, I'm sure they'll come to you and tell you, oh, no problem. But if you looked at how many constituent calls we get here about, you know, unique circumstances, how are you going to do that? How are you going to do that at the local level? If you
well, at least the local tax commissioner is elected, right?
Yeah, but that's not going to help the taxpayer who's in the midterm trying to stay in business because somebody's got liens on them or abusing them publicly. You know, one of the examples we've talked about before is if I'm a retail furniture business in South Georgia and operating in 7 different jurisdictions, that's 7 more sales tax returns 12 times a year I've got to do, and I might have to litigate the same sales tax issue in 7 different jurisdictions. That couldn't be pro-business friendly.
No, that's why I mentioned the Home Depot idea.
But and I don't think you want people to have to do that. I mean, you know, how's Early County going to get an audience with certain companies?
Well, there's cutoff opportunities in different sized organizations.
But there are ways we can exchange information, work together, because more collectors will always collect more money. But I don't think you want to audit the interpretation, because then, you know, your control over us. Make sure we enforce the law fairly and equitably. When you pay somebody on a for-profit basis that has only responsibility to that local government, where are you going to take your issue? That's sort of my position. I'll tell you that the Georgia Chamber of Commerce, unless something's changed overnight, Georgia Chamber of Commerce, the Council on State Taxation, National Tax Organization, are all opposed to this because of what it would do to small business and large business.
Thank you.
Good questions. Thank you. I've got 3 over here, and I apologize if I get them in the wrong order. I did not keep up when these came in, so my apologies ahead of time. I'm just going to do them in chronological order. I got 12 and then 27 and 29. 12 is first.
Thank you, Mr. Chairman. Great question, Chairman Rice, dealing with the sales tax issue and creating a local authority to do it. I think to agree with the Commissioner, from a tax policy point of view, the last thing we want to do is to create more red tape, more bureaucracies, and more reporting entities to go through. So, but along those lines, I know that we have been working, the Department of Revenue, along with ACCG and GMA, have been working closely in the last month to address some of these issues with the corporation, to work with the Department of Revenue through the pilot programs. And I didn't know if it's appropriate time, Mr. Chairman, to maybe get department to speak on that, or any updates that would update the committee to let them know that we're working together and moving forward.
I'm not, well, a lot of that happened this morning in the meeting that you conducted, Representative, and I'm not sure that Commissioner Graham has had a briefing yet. Literally, that's 2 hours old as far as the initiative as to what the plan is, but it is now to get the technology people together. We've not had a lot of success, as far as responses from the AG's office as to what could be shared and so forth, at least from the state and down. Certainly from the local institutions up, we have a really good plan, and I think it's going to be very, very successful. But probably now the timing is a little early for that.
To let the committee know, and I know that's a hot topic, but we are currently working on that, and I think that we would like to come back before the committee and as we get updates and let the committee know of the progress we're making there.
We have no more important mission than that at this point in time. Yes, sir.
Just, you're right. I've not had any briefing on what y'all talked about this morning. I've had other obligations, but I mean, one of the things we need to talk about internally, with the benefit of the conversation this morning, is whether or not to expand the current pilot program, run a parallel second pilot program, or to just move to go live with those that were in the pilot program and then start adding people after that. But from what I've seen and heard so far, I don't have any problem with it. Mine is just as we draw the line on the confidentiality issue to protect taxpayers, but do as much information sharing as we can. And it muddies the water, and it's not universal, but some folks would want to be able to take that kind of information to county commission meetings and talk about taxpayers. And I know you're against that, and others are. But as far as that initial process of exchanging information and exchanging registrations and getting people registered and getting notices going out of the new system, doing it electronically, I mean, I see no impediment to that once we get the ruling about what we can share or what legislation we might need to have in order to share that information.
Commissioner, your department's credit and local government organizations, ACCG, GMA, and to some extent the school boards even, it's very laudable, the spirit of cooperation that's happened in this pilot study. I think it's all been in good faith, and obviously there are several things that warrant protection, like taxpayer confidentiality and others, and I think we're moving forward in a very responsible, thoughtful way, and I think the end result's going to be very, very beneficial to people of the state of Georgia. But that's thanks to the cooperation of the department and others, and we're very grateful for that. And thankful to David Knight, who's kind of led that effort for us in Ways and Means. 27 is...
Thank you, Mr. Chairman. Commissioner, thank you for being here. I want to stay in the topic of sales tax collection just for a moment. I understand that you have some questions about either localized or perhaps even privatized collections of sales taxes. What is our current either delinquent rate or collection rate on sales taxes in the state?
Yeah, I don't know if I have an answer as to what the actual collection rate is. I mean, I guess I could calculate that which we collect per year, and that's what we know is delinquent, and we file a lien against it. We could do that statistic. I don't know that off the top of my head, though. But,
would you guess 50%, 75%, 90%?
No, I would say
100%.
No, certainly not 100, but I would say something north of 95%. I mean, there is money that's not being, well, you got to separate two pieces: that which is a known liability and people can't or won't pay, and that which is unknown. I think the unknown or unidentified is a negligible amount. I mean, it might be anywhere from 3 to 6%. And every $10 million block of that is material. It's not, I'm not dismissing 2% is not material. It is when you're looking to fund something or some other good cause. then we can calculate the known liability that's not paid because businesses go out of business during the year. They've misappropriated the money. They spend it on running the business. They spend it on themselves. They spend it on their own leisure. And we can calculate that number from the known liability standpoint. But I don't have it today, but we can do the math on it because we know what the liabilities are.
Okay.
Yeah, and just anecdotally, well, let me see. I might have an extra number here. Why don't we go to the next question? I might come back.
And we can catch up at some other point in time. I just am interested in understanding, what the collection rate is, and would we get a return on our investment? Should we be able to pull together either a privatized or a localized form of picking this up without sacrificing what we intend to give to our Georgia taxpayers in terms of customer service? And that's the overarching question of mine, and you can ponder that and get back together.
Well, you can't. It's not a possible solution to not compromise confidentiality and allow that collection activity because of due process and giving people the opportunity to explain their position. If you're just going to send them a bill, like if we were just to hand somebody a bill in the neighborhood to go collect it, that would be the only other way. But then they still have to know the tax situation, because I know if somebody walked into my business or my house and said, "Here's a bill from the state," I'm not paying it unless you tell me why I owe it. How'd you come up with that? If it's a third party. So again, working with the locals to register people, exchanging that information, and then us starting the collection activity. I think you get there that way, but I'm not sure how you do actual collection. It'd be one thing if it was just a credit card bill that somebody's going to pay every month and they're just processing the payment. That'd be one thing. But their sales tax, the structure of sales tax, no matter who's doing it, has so many tentacles coming off of from how many returns are filed a year, et cetera. It's more complex than just being able to send a bill out and collecting it. Because those people are already paying. The people that are doing that are willing to do that, they're already paying. And we don't have that problem. One question that related to Chairman Williams' question earlier, you were talking about on the liens. One thing about the liens and the collection on those liens, in a lot of cases, when that lien's against you, I've had people I know personally come to me to settle their debts with the state because their wife couldn't get a cell phone contract. You can't sell the property when the lien's there. You can't get a cell phone contract. That lien puts a lot of pressure on people if there's any way possible for them to pay it. So that also is a motivator to get some people to settle their obligations.
I think, Commissioner, and what I'd like for you to get back to Representative Austin about, if I understood his question correctly, is that there actually are models where there have been private collection agencies that have taken over local sales and use tax collections. We know of them. We've had them come testify to us. They claim that confidentiality is not breached. Obviously, we're in a process of evaluating the most efficient yet lawful ways of collecting taxes that are legitimately owed to the state of Georgia. And I think his question was to the efficiency. I think he's trying to formalize the efficiency, and I think that's a very fair question. I don't think we've absolutely made up our mind whether or not we could change the law to do that or not. I'm not convinced it's a more efficient mode, but I certainly want to laud your approach to that. It's very quantitative and it's very thoughtful, and I'd like for that drill to get finished, if that's fair.
You did a much better job articulating what I could never articulate, Mr. Chairman. Thank you.
And we will just add to that the administrative aspects that go along with that if you go that route.
I understand.
Okay.
And that's all part of the evaluation. But at the end of the day, we're not looking for an opinion. We're looking for the best way for the people of Georgia to collect fiduciary taxes. And I agree with you. I don't think that's privatization at this point in time. But I'm not discounting anything because I'm seeing things in this economy I've never seen in my lifetime. So all bets are off as far as evaluation is concerned. We're looking for the best. 29 finally is Representative Powell.
Thank you, Mr. Chairman. Going back to your statement about trying to find who to contact when you have delinquent taxes or you have a question about taxes, and you specifically mentioned S corporations and LLCs. Do you think that one of the ways that this might be somewhat resolved is just to require by statute that when an LLC or an S corporation incorporates, registers with the Secretary of State, that they are required as part of the incorporation process to designate officers or designate board members or designate LLC members or the managers if it's a manager-managed LLC, so that that information then is available?
Yeah, that's what I was referring to earlier, and I didn't finish my thought on it, is that's exactly what we've asked for a couple of times in the past, and with no disrespect intended, I was told by a member of former leadership that we don't want you to know who those LLC members and LLP members are. We don't want to know who they all are either. We just want to know who the responsible party is, who the manager is, who's got the check signing authority. And it can be done by either requiring that on the registration or just making it clear that the Secretary of State can't accept the registration without that information. Because just having a registered agent doesn't do us any good. That person they can take a pass on any connection or obligation whatsoever.
Well, all the registered agent is agent for service of process.
And the benefit is it's that much faster we collect money that it's not even past due yet, but even it gets resolved more quickly. And if it's past due, we get to the heart of the matter faster by finding the responsible people faster. And we can ultimately get there. It's just how long it's going to take us to get there and how many people it's going to take to do that.
And whether there's going to be anything left by the time you get there.
Oh, sure. I mean, if they know we're coming, they'll do a distribution. They'll spend a reserve account, or they'll distribute it to its members, and then we're in court to try to prove who was responsible.
Thank you, Mr. Chairman.
I suspect we might see some legislation in the near future with your name on it about that very topic.
If you need a starting point, we have drafted this in the past.
Call me.
So a draft is ready, and you can change it like you want.
Yeah. I won't allow y'all to dance in front of the committee. Who's number 10? Number 10.
What's for lunch? Yeah.
Representative James.
Thank you, Mr. Chairman. Sorry I'm late, but I'm a little bit lame, and I'm slow by getting around. Maybe this has been answered. Is there a formula for small businesses who get behind in their taxes for whatever reason to figure out a way that they can pay according to their income, or do you put demands and cause them to just go out of business? Because that has happened in my district in a couple of places.
Yeah, unfortunately, we do have to seize assets from time to time. Is your question directed around sales tax, withholding tax, or income tax, or all three?
Sales tax.
Sales tax. Well, we talked about this some earlier or 2 days ago, and the issue on sales tax is we do have installment plans that we afford people when they can show an ability to pay, and it's going to show to be a viable business concern. Historically, and this is all tax types, we had over 30,000 loans, installment plans outstanding. The default rate was significant, and we were running a small bank. It was the cheapest source of capital somebody could get. As it relates to sales tax specifically, from the moment a company or entity collects that money, it's state property, and when the business spends it in their own operation, even with the best of intentions, they've misappropriated state money. So if that business can come to us and show that they're a viable concern, we will try to work with them if they can pay it off. But what we found ourselves with, and the reason we changed all the processes dealing with that is that people would get on these payment plans, they would tell people like yourself that I made an agreement with them, here's what I'm paying them. In essence, they're collecting 7 or 8% in sales tax. They're giving us 5 and spending the rest for forever. Now, that's not everybody, so we got to evaluate everybody in the process to see if they can get through that. But what they would do is they wouldn't meet the installment agreement, or they put us on their allowance, and then they wouldn't pay the current sales tax obligation they were creating. And that's a way to do business, but it takes a tremendous number of people to make sure we're treating everybody fairly. Because if I'm the competitor across the street or a competitor in Lee County, why does he get to keep 3 or 4% of sales tax, but I got to pay all mine back to the state. It's a challenge to find reasonableness to the taxpayer, but you can't let them spend state money.
Thank you.
Commissioner, I was going to bring up what I'd asked you to do Tuesday was talk about the master sales tax forms. I hope you brought something that we could see, talking about the box stores, the chains, the franchises.
I don't have one. Can I see what you have?
She's got them. And I think you explained to us there are 2 different types of forms. Isn't that correct?
Denise, I don't know what this is. I mean, we don't have copies of them. We have one here, but you want to take this up there and show it to him? Do you here? Do you need the multiple county single? Who knows? You need to walk up there and show it to him.
Well, she can bring it. She can explain it from. You want to explain it from that mic? That mic is on right there, Denise. If you want to.
What I just gave you was a master return, a paper master return. Okay, and that particular company has a number of locations, and as you see as you turn, and that's the old form. Okay, you see that there are multiple counties listed, and that's how the distribution is done. You see the county numbers next to it.
Okay.
Okay.
And how many masters, do you have any idea how many masters we have right now?
I don't. I can find out for you, but
if
I do
you
not
would.
know. Yeah.
And you're going to a new form now? Is that what the integrated tax system is going to be doing?
What I have is the form is now electronic.
Electronic.
Okay. Yeah, so it's on that GTC that Commissioner talked about on Tuesday. And it's the same thing, except they just don't do the paper. They submit it electronically.
The GTC is referring to the Georgia Tax Center. It's our customer service front. And the only data that comes through that mechanism is that data which is relevant to that business, whereas the paper return, you can see there are probably a lot of zeros on there. And all that is captured data is stuff that we're billed for.
Okay. If you could give me how many you got doing, and hopefully next week I want to meet with some county folks, ACCG and GMA folks, to remedy some of the issues I'm having up in my area. And it's probably happening all over some of the states, I should say, some of the state right now. So,
Denise, we just make sure we have the single registrations too, not just the master.
Good.
Yeah, I have samples of all.
Do we need to retrieve that?
Yeah, I would like to.
And make sure they have a blank form?
No, it's not blank, but
no, yeah.
Jeff, I hand that back to her. Okay, I don't think see any other questions. Commissioner, we appreciate you being here and your staff. We will conclude now unless there's another question. Thank you for your time and what you do. Look forward to working with you.
Thank you. We have time to linger if someone else asks an off-side question.